Hi, it's Charlie giving you Monday's market commentary, and I hope you're very well. Just going to be a fairly quick one this morning. The first thing I wanted to discuss is we had an email come in last week. We're always getting emails coming in from traders, and it is lovely getting feedback about how traders are getting on, good or bad, and we try to help them out wherever we can. So Sam gets emails in, she usually forward them on to myself or Kim. And if we can answer, well, we will always answer any questions or whatever it might be that come through. Anyway, so last week I had an email, and I'm sure this person's individual's probably watching this video, and the individual said that he'd been trading for 3 months and had nearly quit 6 times. And so I'm not laughing at this individual. I'm just, it was just a chuckle because the important thing is you don't quit as a trader. You do not quit. Certainly not within 3 months. If you've given it a go for 3 years and then you've decided for whatever reason it's not for you, well, at least you've given it a go. But 3 months, oh my word, I was a bit concerned when I saw that email. So if you're feeling like quitting and you've only been trading for 3 months, then it probably means you've set expectation levels which are beyond your ability. So what you need to do initially is, and the reason I'm bringing this up because I'm sure other people will have had similar thoughts at some stage. Maybe they've been trading for 6 months, maybe they've been trading for a year, maybe they've been trading for 2 years, and they're feeling that way. And so what I would do is ensure firstly that you set your expectations levels low enough. Because too many traders set the bar too high for themselves, and their expectations are too high, and therefore they're setting themselves up for disappointment. So first things first, set the bar a bit lower. Set goals which are steady and small and achievable. So those goals, certainly if you've only been trading for 3 months, all your goal is in the first year of trading is to just accumulate as much experience as you can. So when you're in that first year of trading, it's not about pulling in a huge profit, although of course that's what everybody wants to have. Your first year of trading is about accumulating experience and learning as much as you can over that period by building experience. And so I always say to traders, if you get to the end of your very first year in trading and you're net flat, let's say, on your account, then I would say congratulations to you, because you've just had a year's worth of education and it's not cost you anything. So that would be some advice I'd give to you. But certainly don't be a quitter. Trading is something which is a long-term endeavor, and generally speaking it's going to take 5 years to build true experience. So why is it going to take 5 years? Well, markets go through cycles, and so if you've been trading a year, I'm not saying that you can't obviously be profitable within 5 years, but you're not an experienced trader per se until you've got at least 5 years under your belt, because you won't have experienced trading through different market conditions, whether they be bull markets, bear markets, high volatility or super low volatility. You won't have experienced those, and so therefore you won't know how to deal with those until you've been through them once or twice. So manage those expectation levels. See this as something you're going to be doing for the next 5, 10, 20, 30 years. It's not something that you're trying to get rich quick at. It's something which is going to help to produce an income for you over the longer term. If you set it correctly, set the right expectation levels, and refuse to be one of the statistics, all those other people out there who just give trading a go and then quit. Don't be one of those people. Stick at it. Use every trade as an experience to learn from. So every trade you take, good or bad, you go back over the trade, see was there anything you could have done better, anything that you did wrong, or anything you can overall learn from it. Remember, a losing trade is not necessarily a bad trade. A losing trade is not necessarily a bad trade. It's just a losing trade. So don't think that losses are bad, wins are good. That's not the way to look at trading. We'll go into this more in the upcoming webinars when I do the 10k to 100k challenge webinars, which are coming up on the 22nd for our members and 23rd for non-members. So we'll go through all of that then. But certainly, hopefully that's given you some snippets of useful information. But certainly Good trades, bad trades, no such thing. Well, there is a such thing, because if you actually just execute badly, and then that's fine. But there's nothing wrong with losses, providing the trade setup was fine. There's nothing wrong with having losses. So anyway, review your trades, and you'll learn from that, and that will gradually help you to become an experienced trader over in your first year, or whatever it is, your first 2 years, your first 5 years of trading. Right, okay, let's have a quick look at the indices, and then I better stop because we're already 5 minutes in. Okay, it's funny actually, only a week or so ago on non-farm payrolls, I think it was on this day, it looked like we were going to be coming down and breaking to new lows, and I got short on that day actually, and then I think it must have been on the whatever day it was, the following day, it reversed, and so obviously I got stopped out on that one, even though it was looking like it was going to be a good runner. But anyway, so this is where we are now, all looking fairly good. We've got an 8 and 21 cross even moving average to the upside, so we've got to be looking up towards this next target now on the Dow. So and let's go to the S&P as well. Let's have a look at the S&P. Yep, both looking fairly healthy now, and we've got to be looking overall towards them challenging these all-time highs. So as it currently stands, so that's the way I'll be looking at it. We're above those moving averages. We're breaking out on the outside of my bands even. That suggests to me that I should be looking for long side plays. There's going to be down days, obviously, and amongst all this, but until proven otherwise. And what does proving otherwise mean? Probably getting back below the daily 21. But so until proven otherwise, the trend and the direction is calling for potentially new all-time highs here. Certainly going up to test them anyway. So we'll see how that gets on. We'll have a quick look at some of the other indices as well. The Russell, as we can see, has held up really well, and have a look at the Nasdaq. Nasdaq's doing a similar sort of thing to the other two. So we're going to see if all these markets can actually break out to new highs. So that's going to be the interesting thing to note over the coming days. Anyway, stay safe out there. Enjoy your trading. Be back Friday. I'm in London presenting on Friday, so I'm actually going to record. Hopefully, I'm sure I'm around on Thursday morning. I shall be recording my live trading on Thursday morning and sending that out to you. Probably still send it out on Friday, but I'll be doing the recording and everything on Thursday as I'm in London on Friday. Have a great week. See you then.